the next issue is Apple. Apple made the cut. Why did Apple make the cut? Well, we've had a lot of fun with Apple. As you know, we've been every now and then I'll show you the price charts of Apple that basically we were bullish back here during this stage of the game. And we were looking for the market to continue to go higher, and I've shown you that on and off. Not that we surf the waves, but basically just kind of showing you the progression of the overall Elliott wave assessment. But what caught my attention here, again, notice what I'm looking at, very simple stuff, okay? Price action contained within parallel lines tends to be counter trend. And that's exactly what we have off the December high. And then if you just basically look at the movement in the market, and again, I'm not looking at what's actually going on here. I'm not trying to identify or label or count this price action here, the minutia. I'm not doing that. I'm looking at movement, okay? Primary movement. Okay, it's not like, for example, if you wiggle your finger. Well, this is what I refer to as kind of a, say, wiggling your finger right here, this very, very short-term minutia. Okay, I'm not focused on that. I'm not concerned about that right now. What I'm looking at are the big, not finger wiggles, but the big arm, those exaggerated arm movements. If you were like waving your arms around like a crazy person, big move up, okay, big arm movement, clearly consolidation in the market. Here we have another big move, nice big arm movement up. And then you have this move to the downside. So now, once again, you can begin to see where I'm going with this. I think what is occurring in Apple is this, the development of an impulse wave. So if we are correct, again, in our assessment, in our hypothesis, then we should actually see Apple climb up to maybe $30 a share as we get into that, say, May, June, July timeframe. Okay, here's my Elliott wave assessment. Now, the movement here off the high is a little bit odd, okay? And essentially what we have here is we got a bunch of chop and slop, and that is a technical term, by the way. But if we do kind of get into a little bit more, say, detail, not too granular, but definitely a little bit more detail, you can see, again, focusing on the primary movement off the December high, down, up, down. Okay, three-way structure. The move up, very, very violent, very, very sharp, very, very decisive. So much so that if I recall correctly, I actually even think I was looking for this advance to continue to new price highs. Well, that's actually a key characteristic of an X wave. Okay, X waves can sometimes fake you out. An X wave sometimes gives you the impression that that longer term, larger trend is back in force when it's not. Okay, well, X waves have a very strong tendency to terminate at or near the prior B wave extreme. Okay, so we have this ABC to the downside, sharp move up right to at or near that B wave extreme, and then from there we have this down, up, down sequence. So I'm kind of thinking ABC, X, ABC. Okay, so this is a very viable wave count. WXY, small truncation. As you can clearly see, we have a truncation here in wave C of Y of 4. Ideally, we would have terminated below the wave W extreme. But the only thing that really changes, in my opinion, is that this being a WXY complex correction with the truncation, is that we also, too, must consider the potentiality that we're actually working a contracting triangle. A, B, C, D. So basically we go sideways. Earnings come in later this month. Maybe we see a truncated triangle where we do something like this. We pop up in wave D, kind of like a small, very brief wave D, and then from there we see the wave E decline, come back down into earnings, and then pop we go. Okay, so this could actually be what actually takes shape, or unfolds in this market moving forward. Okay, there we go. So now that wave E extreme is lined up with the earnings. So maybe we pop up a little bit, sell off, once we get into on the other side of the 13th. see some weakness into the end of the month, into earnings. Who knows? I mean, I could totally be wrong on this. And that's where, again, tomorrow, whenever we start to like construct a trade plan, we factor in being wrong. Okay. That becomes part of any professional trade plan. Always consider, okay, hey, what's the best case scenario? Okay. What's the worst case scenario? Is the best case versus the worst case, is it worth, doing it? Okay. And always, again, you're going to be wrong as a trader. You're going to have losing trades. The key thing is what you want to try and do long term, ultimately and consistently, is when you're wrong, you want to be just a little wrong. Okay. You don't want to be a lot wrong. Now, when it comes to being right, well, there you want to be a lot right. Okay. You know exactly what I'm referring to. Now, going through R5, another one here that kind of made the cut was the applied blockchain. And again, what I thought here, I thought this was a really good example of an expanded flat. 3 down, a little bit more clear, a little bit more longevity on this one. ABC, ABC, 1, 2, 3, 4, 5. Okay, so I really like the structure here. As far as that ABC formation, as far as the expanded flat. So again, 3, A, B, C, ideally a bottom in place. Again, be careful of earnings. Earnings are always, well, I think that actually happens maybe today after the market closes. So everything could just go out the window or everything could be confirmed. Remember, earnings are a crapshoot. Okay, I don't like to position myself in a market before earnings because I've seen beautiful wave counts, beautiful wave patterns, work just brilliantly. I'll be looking at a market, and it's almost uncanny how you can, identify every single up and down, every single wave, and everything looks great for 4 or 6 weeks, and then you get into earnings. You're looking at a high confidence situation, or one that you think it is a high confidence situation, and everything goes south because of the earnings report. So this being the case right here, knowing that earnings are coming up, really, I don't see this as a high confident, say, trade setup. Certainly one that I would take, but also too, I would keep this on my watch list because I do indeed think it is viable longer term. Because on that pullback, notice where we fell to in blockchain. On the monthly time frame, we came right back to the Donchian average, which is where I would expect support to actually that's where I would want to see support occur if indeed weakness is counter trend. And then what we see on the weekly time frame, well, so far what we have right here is a 3 inside up bullish reversal formation. So I'm willing to keep this on my watch list moving forward, but I don't want to like step in front of earnings. I don't want to certainly do anything today, maybe not even tomorrow, maybe later this month if the dust settles and I see a 5-wave up followed by a 3-wave decline. I might see this more as a high confident trading candidate, but right now, probably probably not. So tomorrow, what I'll probably end up doing is either offering, well, not offering because I don't do that, but kind of sketching out a trade plan for Apple and who knows, maybe even Micron. Again, I like what I see in Micron. Now you see the process. You go through, and it's just wash, rinse, repeat, wash, rinse, repeat. You do that 2 or 3 times, okay? The first one, you're trying to go through a basket of, say, 100 plus issues, find 20. And then you can take those 20, boil it down to 5. And then of those 5, that's when you want to get into, pull out the magnifying glass, really get into the market, really get into the technicals. And ideally, out of those 5, identify 1 or 2 or 3 issues that are saying, okay, hey, I've done my due diligence. I've gone through this process, wash, rinse, repeat, wash, rinse, repeat 2 or 3 times. And I think this is the market I want to focus on or as a possible trade candidate. Well, that's about it for me for today. As always, thank you very much, and I will see you tomorrow.